welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, looks like we're on course for the 7th straight session when the markets may shut shop in the green. They're building up onto the gains. The second half looks better than the first half of trading session for sure. The Sensex is up by 270 odd points right now. 60,117 right now. When you talk about the Nifty, that's also up by 91 odd points or 0.5% higher in trade. 17,717. That's the level at which the Nifty is really moving higher with. What's supporting this momentum? It's clearly the Nifty Bank that's leading the way. 1.4% uptick for the Nifty Bank index, within which it's the PSU banks that are rallying sharply and supporting that sentiment on the top and on the major index as well. You do have PSU banks, the private banks and the financial services, all of them moving in tow as well. When we look at some of the other sectors that are aiding this momentum on the upside, you do have metals, for example, the autos, they are shining brighter today as well. Apart from this, you do have the FMCG counters that are slightly up. The realty pack also just moving 0.3% higher in trade as well. But what's not really participating in this market mood is clearly the IT stocks. That's down by about 1.7% as far as the Nifty IT index is concerned, and the pharma index as well, that's been sulking slightly as well. But clearly right ahead of the Q4 numbers, it's the IT pack that's clearly nervous as well as right now. But let's get our guest on board to really understand what to make of this market movement. We do have Mr. Gaurang Shah right here joining us on the show, Senior Vice President, Geojit Financial Services. Gaurang, welcome to the show and thank you so much for taking the time out for this discussion. What do you really make of the market's mood right now? We've already had a 600-point rally on the Nifty, a 1,500-point rally on the Bank Nifty as well in the recent run-up. Is this as good as it gets, or do you see a further upside as well?
Thank you, Sakshi, for having me on the show, and good afternoon to all of you all. So I think we've lost quite a ground since the time we made the new all-time high somewhere in first week of December 2022. And from there on, there has been a prolonged downward move, triggered by more of global news and less of local news flows. And then, of course, we went sub 17,000 on the Nifty, and then we've seen the recovery that we are witnessing, especially over the last couple of days. So it's good to see lost ground being recouped and the recovery that we are witnessing. But at the same time, I think from tomorrow onwards, you will have the curtain raiser for the fourth quarter last financial year, with TCS announcing its numbers and rest of the pack to follow. My sense is that since we've recovered so much, there should be some days of profit booking given the kind of short to medium term trades, if any, would have been taken place in the system and the kind of profits that they are making. So people would be tend to book profits, which may lead to a little bit of profit. And not forget, Sakshi, today itself, we started with almost about 350 points, 350 points plus on the Sensex, closer to 400. Then we gave off quite a bit of those gains, and again we are recovering. So we have seen that profit booking during the day. That's why we lost that ground. So these kind of days will be coming. My sense is that the direction of the market will be more ascertained by fourth quarter earnings, which will be unfolding from tomorrow onwards. And sector specific and stock specific, you will have some kind of a direction coming.
Right. We'll speak a little bit more about the earnings in the due course of our interaction today. But as far as the market valuations are concerned for now, how are you looking at that? Are they starting to look a little more reasonable at least?
So I think we are trading at 20.7, closer to 21x. And, if the earnings are going to deliver, Sakshi, all these, P's get re-rated upwards. And our sense at Geojit is that we are possibly in a stage where you are going to see steady improvement as far as earnings are concerned.
Okay.
So in terms of valuation, yes, you need to look out into pockets or sectors with respect to overvaluation, fairly valued or undervalued. So some pockets may look a little bit pricey, some may look very attractive from a long-term point of view. So wherever you see those kind of valuations where it is fairly valued, or there is the potential of earnings re-rating upwards and the valuation getting re-rated, my sense is that you should look at those sectors. But overall, the market looks fairly valued.
Sure. So the market looks very valued, but are you also getting bargains in this market? I mean, that is it a market where you're able to pick stocks and treasure hunt as well?
So, we have been focusing on a couple of sectors. For example, right from last quarter onwards, that is third quarter, banking and finance has delivered good set of numbers.
Right.
Even the fourth quarter business outlook, which was given out by some of the banking managements, they sound extremely strong. So, banking, both public as well as private, select few NBFCs. Capital goods engineering is again in focus because of capex. Defense, Sakshi, is one big sector and one big opportunity that one should look at. Autos, select auto ancillary, and we've seen the commentary from the real estate sector. And not too long ago, I think about a fortnight back, DLF announced that it recorded highest number of sale in a high-end category, somewhere close to about 7 crore in NCR region. Correct me if I'm wrong. And along with that, you had certain other strong real estate players announcing. So real estate
Sure.
sector is something that one can look at. Metals and cement selectively. So broadly, about 5-6 sectors is what you should zero down on.
And of which, as far as the earnings are concerned, where does the outperformance and underperformance lie?
So banking will continue to dominate the way it did over the last couple of quarters, and not only for the last financial year, even for this financial year and coming financial year, I think banking will deliver. Autos have seen good traction. IT is something that a lot of people are under it, but we believe it's a long-term growth story. So IT is something that you should look at. So these are some 3-4 pockets that one should possibly look at.
Right. I'm glad that you pointed out about IT, because that's clearly the focus right now. Today we are seeing this nervous reaction among the IT stocks right ahead of the Q4 earnings season kick-starting. But when it comes to the tech majors coming out with their numbers, TCS, Infosys will be kicking off the first with their numbers. What are you working with when it comes to margin growth expectations and the kind of guidance that we could see from some of these companies, especially at the backdrop of the banking crisis that we have seen, which most of the analysts are now worried about, looking at the kind of margin impact that there would be on the BFSI or on the retail high-tech space as well from these companies?
So first, I'll start off with the good old saying, you can look at a glass being half empty or glass being half full.
Okay.
It's your perspective to look at it.
Okay.
Yes, US, we had this scenario in 2008. After 15 years, we are relatively, again, banking issues,
Revisiting it, yeah.
banks going belly up. So one can argue, orders may be put on hold, but at the same time, our thought processes, and we would like to play a devil's advocate over here, that given the kind of problems that the US banking sector is facing, they would want to make their IT environment even much more stronger, which may want them to spend even a little bit more in terms of IT spend.
Okay.
To make that environment safe enough for people to operate upon. So that's point number one. Point number two, fourth quarter historically, Sakshi, has been weak for IT sector. So there is nothing strange about this.
Sure.
Our sense is, in terms of margin, it should be flat to positive, and commentary is always very, very conservative. My two things that I would possibly look forward to from the commentary: one is the attrition rate, which has been a problem, and second is the deal pipeline. These are the two main features that I would possibly look at. And of course, minus US, there are a lot of other geographies for Indian IT companies to survive.
Why I was asking about IT space is also because most of these companies are actually trading in and around, say, their 5-year average. And for a sector where growth is going to be rather contracting, looking at the uncertainties and the slowdown rather than expanding, then why would you really suggest investors to really pick?
So no sectors will give you flying colors for all the 4 quarters, Sakshi. There are difficult times, whether it is IT or whether it is manufacturing, whether it is services, whether it is any other related sector. So it depends upon what is your perspective when you invest into a particular sector in a company. Now, if you are in for maybe about 1.5 to 2 year kind of time horizon, given the kind of correction that we've already seen before the third quarter numbers were announced for the IT sector, we almost seen 25% plus correction in the IT index, maybe a little bit more stock specific. But there is an opportunity, and let me say this over here. For you and me as an individual, if it is so important to use information technology, can really small, medium or large size companies stay without being serviced by IT sector? I think that's the big question, especially in an environment where you have scams, phishing, hacking, etc. going on. So, corporates need to make their IT environment conducive and safe enough for the users to use it without any fear. So
Right.
we have a contrarian view. I'm not talking about next 3 6 months. I'm talking about next year and a half too.
Sure, sure. In terms of the pecking order, where would you place your bets ahead of the earnings in terms of the IT sector?
So our preference in the big cap, large cap, I beg your pardon, would be TCS, HCL Tech, Tech Mahindra, and Infosys. But not to forget, Sakshi, mid cap IT has done reasonably well,
Yeah,
sometimes over delivering than big boys.
yeah.
Over there, we have KPIT Tech, Tech Mahindra, Coforge, LTI Mindtree, and Persistent Systems.
Okay, well, there you have a whole host of names from both large caps and mid caps that you can watch out for ahead of the earnings as preferred bets from Gaurang right there. You did talk about the banks and the financial space as well, particularly on the NBFC's pack. I wanted to ask you because interest rates are peaking out, and NBFCs normally outperform when interest rates are either on the threshold of peaking out or have peaked out already. So, is it the right time to really go back to the Bajaj twins? Or Aditya Birla Capital, or for that matter, IIFL Finance? What would you really suggest investors?
So we have three verticals in the NBFC, and to make it more easy to understand for your viewers and investors, diversified finance companies,
Yeah.
housing finance companies, and microfinance companies. So we are positive on Bajaj Finance. Let me give it as a disclosure from a long-term
Okay.
point of view. The recent correction that we had is an opportunity to look at. They've
Okay.
got some great products and business model penetrating into semi-urban and rural India, and there are a lot of opportunities over there. For housing finance companies, I just spoke about real estate a while back. So if real
Sure.
estate is going to do well, housing finance companies are definitely going to do well. And last week, I think it was a very pleasant surprise delivered by the Honorable RBI Governor and Monetary Policy Committee by
Yeah.
taking a pause. And if the Al Nino doesn't play a tantrum, if the monsoon is fairly normal enough, then I think we have to put to rest food inflation worries. And that will translate into a longer pause for any kind of upwards movement for interest rates, which will again translate into a lot of positivities. And then you have the microfinance. Now, microfinance, especially Sakshi, it is very attractive because first of all, the ticket size is very small, and
Yeah.
the repayment run rate of principal and interest is almost about 90% plus.
Hmm.
So you have to place yourself amongst these three verticals as far as the NBFCs are concerned.
Right. I'm glad that you pointed out about monsoons. I'm going to be coming to that as well in terms of the worries for the markets going forward. But if you could tell us a bit more about the other small and the mid cap opportunities that you would be perhaps scouting right now, or at least sectors in the mid and small caps as well that you're keeping on your radar.
So small caps, actually, we are very, very, very selective because we are in the business of creating wealth for investors, whether it is small, medium, or HNI. And
Right.
over there, you have to actually handhold them and take them through that path of financial wealth creation over a longer period of time. So
Hmm.
our basically focus is going to be large cap, followed by select mid caps. Those mid
Okay.
caps would be into IT, like I mentioned a while back,
Right.
FMCG, autos, metal, cement, defense, and cap goods engineering. These are the broad 5 6 sectors within which we would do some kind of value buying with respect to investment ideas. To give
Hmm.
a few names in the cap goods engineering space, KC International is other than of course the big boys like L&Ts
Yeah.
and the Siemens and the ABBs of the world.
Yeah.
KC International is something we are positive on. Defense,
Okay.
we like BEL, Hindustan Aeronautics, Bharat Dynamics, Mazgaon Docks, and Cochin Shipyard. In the metals pack, we are positive on JSPL, Hindalco, to
Okay.
name a few.
Okay.
Cement, I think that's one particular sector that will be again in a spotlight. So over there,
Okay.
minus the large cap, you have names like Dalmia Bharat Cement, you have names like Ramco Cement, JK Lakshmi Cement, which look extremely attractive from an investment perspective. And of course, FMCG sector is there. Other than the HULs and the ITCs of the world, I think Dabur, Marico, Godrej Consumer Products, Tata Consumer could do reasonably well.
Okay, okay. Glad that you pointed out a number of names that investors can now scout for and look for the best options for them among all of this as well. Another factor that we've been constantly keeping an eye out on is the kind of FII flows. Now, after a long haul, we've been seeing slight recovery over there. The fact that we had seen at least in the past few trading sessions, there have been more inflows coming in from the FI community. Will this continue, and will they be able to undo what they have done in the past year?
So, there are larger events which lie in front of us, and I am quite sure that FIs would surely be looking forward for all those events to unfold. Of course, there are state elections across the country, six of them along with union territories, and then you have a bigger one in 2024. Uh, Yes, we are on a steady growth trajectory as far as GDP numbers are concerned. And I don't think there is any emerging economy who can come close to us with respect to the GDP number that we are clocking. Interest
Right.
rates also we have taken a pause. Inflation is fairly lower over the last 3 months. Again, if the monsoon doesn't play a spoil sport, I think we are headed lower. I think very soon we'll have the inflation number also. So in
Yeah.
all those broad numbers that I spoke about, we are reasonably placed. And if FIs have to look at a destination which is giving you growth opportunity, that is definitely going to be India. So they will come. Maybe they may take time because of the events that are lined up, but I don't think they can ignore India as an investment destination.
Okay. In fact, on the monsoons bit, I wanted to really ask you that, is this going to be the biggest factor that one should watch out for? What could derail the current direction of the markets, or is there something else also that could spot as a worry? What are you really looking as the major factors that one should really watch out for?
So, well, again, playing a devil's advocate, crude oil is going to be a major joker in the
Yeah.
pack. Come 1st of May, you will have $5 lakh per day cut from OPEC plus. Uh, we are doing good enough in terms of our energy requirement from Russia at discounted prices than what the market prices are. But the cut when it comes in from 1st of May 2023, one needs to be a little bit careful in terms of what the demand is and how much the supply is. And where does the crude oil prices go and place themselves? Currently, we are at $80 NYMEX per barrel, $84 Brent per barrel. There is a commentary which I heard or a report which I read, which tells us that we may be growing closer to 90 and even above that in case if the demand is surpasses to a great extent to the supplies. So in that kind of a scenario, Sakshi, I think it will be very prudent to understand how much of India's energy requirement can be secured via Russia discounted prices.
That's true.
Secondly, like I mentioned, monsoon. These are the two important factors that may have its impact on the market, not only India as a market, but global markets across the world. And of course, then I mentioned about monsoon and elections. So
Yeah.
we may be, having knee-jerk reaction depending upon how.
Sure. All right. Well, thank you so much, Gaurang, for being with us on the show and sharing all these wonderful insights with all our viewers right ahead of the earnings season, the way to maneuver some of these uncertainties as well, and to still stay on course as far as making returns in the markets is concerned. Always valuable insights. Appreciate them. Many thanks for joining us once again, and we shall continue to touch base
Thank
with
you,
you
Sakshi.
in future course as well. The markets right now moving to the high point of the day again, 346 points higher for the Sensex, 60,191. Talk about the Nifty, that's 109 points up right now, 0.6% of an upside, 17,733. So the market's looking good. About 10 minutes odd to shut shop for the day's session, and this could well be the 7th straight session when we close in the green. We'll keep an eye out on everything that may impact the markets and may also impact your own investment decisions as well. So to track all these developments and to get all the expert views, you should stick with us on Business Today TV to catch all the updates. And don't forget to also continue to engage with us on our other social media platforms, that's Facebook, Twitter, LinkedIn and Instagram. Until then, many thanks for tuning in.